Hi, this is MacManus from MacManus Finance. In this video, I'm talking about VAT deferrals and how we use them with hire purchase facilities to create the perfect solution for our business customers, helping them manage the benefits of ownership and managing cash flow together. So a VAT deferral typically comes into play on asset finance deals, and this is where a customer is buying an asset and they want to be able to have ownership of the goods at the end of it, but they also want to minimise their cash outlay in the first instance. If I walk you through how typically an asset finance deal has historically worked in the hire purchase side of it, it'll make more sense. So for many years, traditional hire purchase, which is an ownership facility, that means you own the goods at the end. Most businesses tend to want that. You would pay a deposit of around about 10% plus the full VAT on the cost of the asset as your deposit. So in an example of £100,000 plus VAT for a truck or a piece of machinery, you would pay as a business 10% of that pre-VAT figure, so £10,000, plus all the VAT, which is £20,000 at the moment, would be paid up front. So you would get finance of £90,000 and you'd have to pay out £30,000 to progress with that on a traditional hire purchase basis. With that, there's no VAT on your monthly payments and you would own the asset at the end. So you get what you want in terms of owning the asset, but it's quite a chunk of change to find at the outset. And remember, your VAT is reclaimable, so you're getting that money back in 3 months. People who didn't have that amount of cash available to put down have often been pushed into the finance lease method. Now, a finance lease is a rental facility. That means you don't own that asset at the end of the term. Despite what some people tell you, you don't. There are ways of getting ownership of it, but under a finance lease, you don't own it unless we take some steps at the end of that process. So in the same example of a £100,000 VAT plus VAT asset, your deposit is not actually a deposit, it's called an advance rental because you're not owning the asset. Again, would probably be about 10% of the pre-VAT cost, but the VAT is added to that deposit or advance rental payment. So your 10,000 would be 10,000 plus £2,000 VAT. So you'd be part with 12,000 immediately as your deposit, advance rental. And the finance company would be financing £90,000 plus VAT, which gets the supplier then what they want. All your monthly payments are actually called rentals, and they are plus VAT. So whatever your monthly cost would be is VAT on top. Now you are able to reclaim your VAT on your deposit, small amount of VAT there, and VAT on your monthly rentals, but it's a rental facility, you don't own it until we get to the end of the lease, and there are options there that we can work through to get title back to you. But it's a little involved, and to be honest, we only really need to do this if you can't or you haven't got the cash deposit to take ownership at the outset. Because if you want ownership, HP is the way to go. So how do we square that circle if cash flow is a challenge but you want ownership? So this is the perfect solution for you if you're in that situation. Hire purchase with a VAT deferral. So let's go back to our example again. You've got an asset costing you 100 grand plus VAT. Now your deposit now is only going to be that 10% of the pre-VAT. The VAT on purchase is paid by the finance company to the supplier. You don't have to find this 20,000 straight away. We defer it for 3 months. Once the deal goes live, you can claim for your VAT on the full cost straight away from HMRC, meaning you'll have that money back in your account within 3 months. And then with the third monthly instalment, you pay the VAT payments at that point. So you claim the VAT back before you need to pay it. You've only had to find that £10,000 initially, not £30,000 as we did in the first place. Because remember, that VAT you're getting back. So a VAT deferral on a hire purchase gives you ownership and the cash flow benefit of not having to part with that cash and getting it out of your cash flow for a period of 3 months. So as we say, it gives you the benefits of ownership and the cash flow benefit of reduced monthly outlay. So I wanted to touch on a couple of things here that terminology sometimes gets bandied about and it's confusing for a lot of customers. I see this an awful lot. I hate leases, I'll be honest with you, I can't stand them. I don't see why they need to be there. People want to own an asset, this is the way to do it. Inside information, these products only exist to make finance companies lots of money because they can hide the true cost of borrowing and they keep ownership from you, and I don't like them. On an ownership facility, all the costs are disclosed on your document. You can see what the cost of the goods are. A finance or a lease document, it doesn't say what the cost of the item is. It just doesn't. The document doesn't require it. So you don't know what you're really being charged. Okay? So given the option, get an option to buy the asset and get it on a hire purchase basis. And if you need to defer the VAT, do that to help your cash flow, and you'll own it at the end. The key to understanding what's a purchase agreement or what's a lease is what's in the name. If the product has the word purchase in it, hire purchase, lease purchase, personal contract purchase, that is an ownership facility. That means you own the goods at the end of the term. If it doesn't have the word purchase in, so a finance lease, a hire agreement, an operating lease, or a contract hire, that's a rental facility. You don't own it. There are ways of transferring title at the end where you sell the goods to a third party and buy it back. But don't be confused or misled into buying something that is not what you think it is. With an ownership facility, you get to claim all the annual investment allowances available at point of purchase. With a rental facility, you can only offset the cost of your rentals through the term of the loan. There are tax advantages to both, but you get all the cost of write-off in year one on a HP, and you get the drip through the term of the rental with an operating lease facility. So, my advice, if you're buying an asset and you want to own it at the end, you need to do a hire purchase facility. If you have cash flow challenges, talk to us about a VAT deferral. Most of our lenders, if they're willing to lend to you, will agree to do a VAT deferral as well. And if the lenders don't, we'll find you a lender that will. So, any questions about helping you funding your assets, managing your cash flow, talk to us. VAT deferrals is a fantastic way of getting you over the line if cash flow is a challenge and are able to find a deposit. Thanks so much for watching. I'm Chris from MacManus Finance.